All right, and we are live. Welcome, DoorGrow hackers, to the DoorGrow show. If you are a property management entrepreneur that wants to add doors, make a difference, increase revenue, help others, impact lives, and you are interested in growing your business and life, and you're open to doing things a bit differently, then you are a DoorGrow hacker. DoorGrow hackers love the opportunities, daily variety, unique challenges, and freedom that property management brings. Many in real estate think you're crazy for doing it. You think they're crazy for not, because you realize that property management is the ultimate high trust gateway to real estate deals, relationships, and residual income. At DoorGrow, we are on a mission to transform property management businesses and their owners. We want to transform the industry, eliminate the BS, build awareness, change perception, expand the market, and help the best property management entrepreneurs win. I'm your host, property management growth expert, Jason Hull, the founder and CEO of DoorGrow. Now, let's get into the show. And today's guest, who I'm hanging out with, is Bruce Mack of Platinum Trust Group. Bruce, welcome to the show.
Thank you so much. I really appreciate it. And wow, you definitely unbelievable, your opening.
Thank you. So it's built around all the challenges that we've heard in the industry and what our client-centric mission is as a company. So I wanted to fold all that into our intro, and I call it our show. So I appreciate you giving us some positive feedback on it. So Bruce, I'm really interested in getting into this. Before we get into the topic at hand, which today's topic is 7 options to fund your business. And this is a common challenge of people not being able to, afford to do work with us, being able to afford to do the things they need to do to grow their business. This is a common challenge, and there's a lot of entrepreneurs that are just trying to operate just paycheck to paycheck. And in order to get ahead and grow their business, they need to find some funding or get some money or figure out how to make it work or save something in order to make that work. So before we get into that, could you give everybody kind of a bit of background? Let's qualify you, help them understand how you got into what you're doing. So
Fair
tell
enough.
everybody, who's Bruce?
Who's Bruce? Well, in a couple of sentences, or at least a short paragraph, I'm a avid real estate investor, have been. In a 3-year period of time. I was able to buy, rehab, and flip over 160 properties. I've been involved with over $92 million worth of real estate transactions, SFRs, as well as commercial. I'm a licensed financial advisor, prior owner and operator of a credit repair company that was also licensed and bonded. So I've been around the block. I love working with real estate investors. I speak to them all over the world, as well as nationally, and have been at countless events, helping folks just like the folks that are on this podcast to be able to reach their financial goals and objectives through getting them the rudimentary financing that they need so they can take their business to the next level.
Okay, great. So let's get into the 7 options. I guess we're starting with number 1, right?
Okay, well, let's start with number 1. Number 1, one of our premier programs that we use on a daily basis is what I call our revolving lines of credit program. Now, the nice thing is with this particular program is that there are a lot of no's, but these are no's that you want to hear, not no's that you don't want to hear.
Okay.
One of the no's is that you don't have to have a business plan. Another no is that you don't have to have collateral pledged to be able to qualify for this. So if you don't have any collateral, i.e. properties, what have you, or other hard assets, there are no collateral pledges. Another no is that you don't have to have a income verification because it's a stated program. So without a business plan, without having to state an income, without having to go through a bunch of hoops, this makes it an easy qualified program. And the key qualifiers are having a FICO score, ideally north of 700, or 700 when we put you through the program, and having more than one, ideally, open lines of credit with a credit card, that would be at least $7,500 worth of credit limit, and that at the time that we put you through, that you're ideally at 30% or lower on your utilization. So let's just say you have a $10,000 credit card. Let's say you have $7,000 balance currently. That would be at 70% utilization. So what we're saying is that we'd like to see that $10,000 credit card has no more than 30% utilization, or that you're not currently carrying more than a $30,000 balance. Now, if you are, because there's too much month, not enough money, and therefore you have higher balances, we do have a solution. We do have another funding division that will likely take a look at those balances and work with you to actually pay them down for you, so that therefore your scores will skyrocket to where we need them to be. Your utilization ratios will plummet to where we need them to be, so that we can get the maximum result. The maximum result is our average client on a first round funding gets $75,000 worth of revolving lines of credit, as much as $150,000 on a first round fund. So when done properly, and if we have a client that comes to us with longevity of accounts, no derogatory, so on and so forth, of course, that's going to get us all a better net result for the client on the back end. And again, these lines of credit are all at 0% APR for up to 21 months.
Okay. So, but they've got to, the crux behind this is they've got to have good credit in place in order to do this one.
Well, there's a couple of other ifs, ands, and buts. So let's talk about them briefly. Number one, we have taken people, because of that high utilization, we have taken people with scores as low as 620, and just by paying down those balances, they've shot their scores up within a several week period of time to well over 700, and then we can put them through. So today's present credit score may qualify you, even if it's not at a 7, you're not knocking on the 700 door or higher. We need to do a consultation and see if the net effect of paying down those cards is going to get you to where we need you to be. Secondarily, we do have a secondary program, in as much as if the client can't qualify, but they have what we call a credit partner. Maybe it's a partner in their business, maybe it's a relative, a friend. We can use a credit partner to get the same results, thus being able to put them through the program, and that could be a win-win. So there's a number of different ways we can literally skin the cat to get to the desired result, which is to get the client funded on that program.
All right. So you can help them with pay down sort of process. You can help them. They could use a credit partner.
That's correct.
There's a couple of options there. Okay. So that's number one. That's
number one.
The revolving lines of credit program.
Number two, one of our other core programs is we have 25 lenders, and we have a platform for the 25 lenders, and they are offering on the platform anywhere from $1,000 to $50,000, and we can stack those offers. So if you were to get two $50,000 offers, obviously you pony those up and parlay them into $100,000. Now we can take more credit challenged folks. We have gotten people some funding with FICOs as low as 580. So the key here is that there needs to be provable income, where the income on the revolving lines of credit is stated. These will need to be proved up through either showing the last couple of pay stubs, and or from doing account validation by showing bank statements, 1099s, a year's tax return, what have you.
Okay.
Very, very simple program. 12 questions asked and answered online. A soft pull with instantaneous pre-approvals and funding within usually a week, week and a half. So this is a secondary program that can be used. We use it all the time, and it's very, very effective.
Okay, got it. So would these 25 lenders, these would be people like maybe Fundbox and some of these services out there? Would it be like those kind of companies?
Could be, yes. I mean, we have our own lender pool that we work with. The nice thing is there are a number of lenders that you can apply to on the net today, tomorrow,
Yeah.
yesterday, what have you. But that's problematic. Every
Okay.
time you apply, you're going to be getting an inquiry, and every inquiry is going to be anywhere from 2 to several points, and it starts to drag down your profile. Worse
Right.
than that, other creditors that you're applying with see that you've been applying. So the way we do it is when you access our platform with one soft inquiry, so it doesn't even show on your report, you're getting one or multiple pre-approvals from multiple lenders at multiple options in terms of length, anywhere from 12 months out to as long as 60 months or 5 years.
Got
So
it.
this is a ideal way where you have no FICO hit, no negatives, only positives, and you can get the pre-approvals before you even press the accept button and go into what we call the final underwriting or the hard underwriting.
Got it. Okay, cool.
Awesome.
Anything else to know about this second option? What would you call this second option? Your 25 lenders platform,
Our
or
25 lenders platform, or our installment based lending platform.
got it, installment based. Okay.
Mm-hmm.
All right. So are we on to number 3 now?
Number 3. Let's talk about what we call our BDRA. Our
BDRA.
BDRA. Our BDRA stands for Business Directed Retirement Account. Now, many of the people that are on the podcast have a rollable IRA or 401k.
Okay.
Maybe they're even working and aren't aware that they have a rollable IRA or 401k amount.
Okay.
So let's just say that you're currently working at an employer. You may have $100,000 there, and your employer's told you, well, you can't touch that. It's not rollable. And they're maybe half correct, because prior to coming to the existing employer, you worked at another employer. And when you were at that other employer, guess what? You had a $50,000 IRA, which you then rolled over to your present employer. Well, I'm here to tell you some really great news. You can do what's called a carve out. So you can take those monies and move them from your present employer, because those were monies that came from a previous employer, and you can automatically put them into what we call our BDRA. And that BDRA is a wonderful opportunity for you to be able to access those funds to do what you will and what you want with them.
Unlike and that's called what again?
Business Directed Retirement Account.
Okay.
Now, it's very, very different than a self-directed normal account. And the some self-directed retirement accounts have the ability to give you checkbook capability, which is great. The BDRA coincidentally also does. But many of the self-directed accounts, which are accounts that once you've moved on from your old employer, you've moved them into a self-directed environment so that you can tell your money what you want it to do. But the problem is with the traditional IRA or 401k in a self-directed environment, which there are many administrators that are out there and offer these types of accounts. The key problem is that you cannot use these but for very specific types of transactions. So let's just take a typical real estate transaction. House costs $200,000. You have $100,000 in the self-directed retirement account. You need to come up with $100,000. Now, unfortunately, you cannot obligate a self-directed retirement account, a traditional type, not ours, but a traditional type, and you cannot take on a recourse loan because one of the exemptions is you cannot you cannot sign and obligate your IRA or your 401k to an external obligation. So if you can't do that whole deal inside your IRA, you're pooched. You can't do the deal. Now, there is the possibility of taking on what's called a non-recourse loan where you wouldn't sign. However, they're very few and far between. They never go more than 50% of LTV, and they're usually a couple of points higher for all the right reasons, right? You're only having the collateralized value of the loan. So with a BDRA, I've got great news. You can take recourse loans on, and it's not a violation of the BDRA precepts. Secondarily, when you have a normal IRA or 401k, unfortunately, you're exempt from being able to do what we call interfamiliar transactions because they're called a prohibited transaction, meaning father, sister, mother, brother, siblings, what have you, you plain and simple are not allowed to invest with them because it's prohibited. That is not the case with the self-directed that we have in the BDRA environment. Third, you can put up to $53,000 of your annual salary into this tax-deferred vehicle where you cannot with a traditional IRA or 401k that's self-directed. And fourth, you can use the money for any business purpose. Now, you mentioned earlier and that you've got coaching programs, and coaching programs sometimes are 10, 20, 30, 40, 50, whatever the amount is, it makes no difference. But the flexibility of a BDRA is a beautiful thing because BDRA funds can be used for any business purpose whatsoever. When you talk about a traditional IRA or 401k, they're very finite, they're very linear, real estate being one of them, stocks and bonds being another, and there's a couple of others, and pretty much after that, you're out of luck. So the flexibility that the BDRA brings to the table is phenomenal, and it is a great way to resource funds for enhancing your real estate business, not only from a buying of the doors perspective, but from doing rehabs, for also doing for potentially using it for marketing money to expand your net. So there's many different ways that these monies can be used that are all in conformity. All righty.
Yes.
BDRA.
All right. BDRA is number 3. Number 4.
Oh my gosh. Well, we have transactional funding. With our transactional funding, I'm sure are a number of folks that are on this podcast that engage with wholesale flips, where you're doing an A to B and B to C transaction. Well, we have transactional funding. We have $1 million on the sidelines at all times. You let us know, give us a couple days notice, and I mean, give us more notice than that, but within a couple of days, we can get the funds prepared, move them electronically to your escrow so that you can close and not have to be out of pocket if you're the wholesaler and get the job done. The fee cost for that is the most reasonable that I've seen in the industry. The cost for funds is only 1.75% and a $4.95 transaction fee, or processing fee, call it what you will. So that's another win-win strategy. If you're a wholesaler, you don't have the funds, and you're going through a traditional escrow, this is a perfect way to make everything come together so that you can get your property sold to that new buyer.
Okay. Cool. And is that everything about transactional funding?
That's everything about transactional funding, short and sweet.
All right, let's look at number 5.
Let's talk about number 5. Now, this is an esoteric way of getting funding. But saving a dollar obviously gives you a dollar to, as I put it, redeploy or repurpose. And I'm sure we
Sure.
would all agree with that. And saving tens of thousands of dollars or more starts to become very, very interesting. Let's tell you how. We have on the other side of our business, we have our trust division, and it's called Platinum Trust Group. And Platinum Trust Group is dedicated to bulletproof asset protection. I'll touch on that in a moment, but let me talk about the money aspect where you can redeploy. Real estate investors, by the nature of who they are and what they're, are involved with two types and multiple streams of what we call passive income. Okay. And the passive income that we're talking about would either be long or short-term capital gains and or lease and or rental income. And that is the sum and substance of what it's all about, right? One or the other.
Okay.
So with our proprietary trust, which we have 58 copyrights on, we've had the trust for over 20 years. We have over 31,000 clients on this program. As a real estate investor, when the properties are sold or the rents are collected, monies goes into the corpus of the trust. However, the good news is you can use the trust for any trust-related activities, which would be anything other than what we call food, fun, or fashion. So now you're doing all your business out of the trust. And when it comes time for tax time, because you're not making taxable distributions. However, don't get me wrong, that doesn't mean you can't buy properties, you can't buy cars. That doesn't mean that you can't act in a fiduciary capacity as a trustee to do everything that you would normally be doing on a daily basis. The good news is that monies, that long and short-term capital gains, which could be 20, 30%, depending, and or the income from the lease and rental income, the fact that it goes into corpus and stays into corpus and that it's deferred in perpetuity means that you're not going to have the tax bill at the end of the year. Now, we have many investors who have tax bills in the $50, $100, $200,000 a year and are paying quarterlies that are enough to choke a horse. Yeah. If we're able to defer up to 97% of that annual tax liability and including the quarterlies and defer it out in perpetuity, which means 21 years after the last of the beneficiaries deceases and 21 years after the last of the beneficiaries heirs decease, i.e. 100, 200, 300 years from now, we now have a vehicle that nobody in your family tree is going to have the tax consequence, and certainly not you. And now we've got all of this additional liquidity that we can be using for investment purposes that could be and is a huge win for our real estate investors. And that's only one piece of the coin, because the other side of that coin is the bulletproof asset protection, because you can never have a lien or a judgment executed against you. It can't happen, let alone your properties, because your properties are in the titanium vault of the trust. This is huge, and this is a great, great income opportunity and or savings opportunity for you. So I think we're at way number 6, or are we way number 5?
We're at number 6.
All right.
That was number 5, was basically the, you would call that your trust division.
Okay, number 6. We have a number of private money solutions and hard money solutions that start as low as 4.9% on the APR and 1 to 2 points. Solutions for clients who have rental income properties and they want to do some cash out. We have even a blanket loan program, which is available in 43 states. So if you've got properties, we have a solution for you to be able to access a ton of the money that you are currently not able to access so that you can redeploy it on new projects. This could be huge for you by our hard and or private money funding. We even can talk about, should you have ground up projects that you're looking to get underway. So these are other ways that we can access funds for you depending upon what the project looks like. So there's just so many different machinations. Without knowing more, we would really need to sit and talk. But not only can we get you the blanket loans, not only can we get you the cash out refis, we can do multifamily, we can do SFRs, ground up projects. So it just depends on what it is that you're looking for.
Okay, great. And that's number 6.
That's number 6.
Private and hard money lending solutions. All right, so let's get into number 7.
Number 7. Well, number 7 is really a relationship oriented proposition. Because I lecture on a nationwide basis and know so many people, I am constantly sourcing and or resourcing and putting folks together. I speak, I meet sponsors. Sponsors are always looking for people to act as general partners with other people who are newer and or what I would call green peas, and vice versa. I have green peas that are looking for sponsors. So just by nature of the fact that I love to network, love to help people out. And if people are looking for a connection, I'll give you an example. Yesterday, I had a guy come to me in the Seattle area. He is looking to do a conversion. He's got 93 apartment building apartments that he wants to build in one structure. He's looking for general partners and money partners and he's got everything ready to go. He's got the water, he's got the utilities, he's got all the zoning. He's looking for money partners, and he's also looking for some management help. Well, we have the perfect fit for him because we have people who are right up in the Seattle area, because I've spoken recently up in the Seattle area to 800 people at one event, and that's an easy plug and play scenario. So oftentimes you just never know. I don't know where you're calling in from on a nationwide basis, because I know you have callers all over the place. I'm California centric, but I travel. I was just in Boston speaking to 1,000 people. So you never know who you know. And tell me about the situation. And if there's a possibility that we can help, we certainly can try and plug two good ends into one another so that you can make a whole and get your project going, so you can take it to the next level.
Okay, cool. Perfect. So in looking at all these different methods, so say I get a client that comes to me, they are looking at, they want to hire staff. They want to focus on marketing. Maybe they want to do some coaching stuff with us. They need to get office space. These typical things to get their business going. Which channel would you push them towards first? Like what would be the best situation for them first?
Well, if the need is an average of, say, $75,000, roughly, somewhere between 50 and 150, I'll kind of use that $100,000 spread. Invariably, our revolving lines of credit program is the sweet spot, and we utilize that at promoter events all the time for that 20, that 30, that $40,000 to get them off the home plate, to get them the coaching program that they need, to get them also the initial marketing monies that they need so that they can really start to get traction and move forward in the marketplace. So it's very easy, and they don't need to have any collateral. And again, it's a stated program. So if the person fits the parameters, it's by far and away the easiest, fastest, and most effective and cost-effective solution. Mm-hmm.
Now, what if they're just wanting to do something smaller? They're just getting started. They're bootstrapping. They want, like, maybe they're looking for maybe like 3K to 20K, you know, something like in there. They just need to get some additional funds to get some things going in the business. Would your recommendation still be the same vehicle?
Depending. I mean, let's just say today the need is 3K to 20K. And let's just say they've got $100,000 locked up at the old employer that they used to work for, General Dynamics, let's just say, and they're taking that money and they're churning it in the stock market, and they're getting a horrible return, and they want to take control of it. I would move all of that to a self-directed environment and then parse out where you've got total control over it. And then I would parse out whatever that amount is that you need to deploy for the business purpose, for whatever business purpose. So if they only needed 3K, or they $7,000 or $10,000 of that $100,000, they could immediately deploy it, because again, they have total discretionary use over the funds once it's in their dominion. Likewise, another one of our programs might be for them to engage with the 25 lender platform, and in a request, only request 3,000 or only request 10,000 if that's what it is that they're looking for. So that could be another way to go. So we really need to have a discussion, is my best suggestion to the folks that are listening, because sometimes during the course of discussion, we find that 3 or 7 or 10 may not actually be what you're the sum and substance of what you're looking for, depending upon where you are and where you want to go. Maybe it is, and we will come up with, based upon your credit and what you bring to the table, what's going to be the most cost-effective way to get you there.
So let's address the mindset of funding, because I'm sure there's people listening and they want to bootstrap everything. They're thinking, I don't want to go into debt to do anything. And what would you say to that? Because maybe that mindset is holding them back from being able to grow their businesses quickly and generate more revenue as fast.
I don't mean to be pragmatic, but I would say they might be thinking about being in the wrong business if they don't want to go into debt. I've bought houses utilizing credit cards before. And if you go to any RIA, anywhere in the United States, and if you're not familiar with the term RIA, that's Real Estate Investor Association meeting. If you go to any Real Estate Investor Association meeting anywhere in the United States, and you interview, and I mean, take them out for coffee or meet them, talk to them after the meeting, what have you, and you ask them, how did they get the funds to buy some of their first properties? I can guarantee you, dollars to donuts, that they borrowed money from a friend, borrowed money from their parents, or borrowed money from their credit cards to get their first property, or a combination of all three cobbled together to make it to happen, because they didn't have the money in their checking account. It was a little devoid or a little depleted at that time. So guys, this is truly a leverage play and an arbitrage play when you're borrowing money at X, because you can make Y times X equaling that new number, which is the ability to compound on the amount of money that you're using to be able to get you that much bigger amount of money on the back end. So I'm a firm believer in making the right decisions and not getting these monies for a a she shed or a man cave, forget it.
Yeah.
You don't come to
Right.
me if that's what you want. If that's your ultimate goal, that's not leverage. That's just sheer stupidity and a waste of time and a waste of money. But if you're looking to get these monies to be able to deploy them in an efficacious way and to utilize them to gain the leverage to be able to get a much bigger payday down the road when you exercise your exit strategy, let's go. Let's make it happen. And we're here to help and get you to your financial goals.
So I'll point out some listening because I know there's some property managers listening that are like, well, I'm not a real estate investor. Some property managers that are running property management companies are not real estate investors. I think
That's
many
true.
of them are. They're involved, but they're thinking, well, what about my business? Maybe I need funding for the business. But I think the same principle applies. The idea is that I want to point out is mindset wise, I think a business is probably one of the most effective, if you do this well, most effective investments you can invest in, period, because very few things could give a return on an investment that a business can. I don't think even real estate, I think a lot of things cannot yield as high of a return as a business that is profitable and highly effective. And so if the investment is moving the business towards those things, I would imagine that it's going to far outplay a 401k or any other sort of investment they might be throwing them dollars towards in the long run. An effective business can yield a huge return, especially once maybe they either sell it or it can just be an ATM machine that's feeding them once they've systemized the business and they've kind of stepped out of being involved in it. And so if you're going to go into debt, I think it's wise to say, make sure it's going towards the right thing and that it's going to yield the ROI that you're looking to get. So
may I ask a brief question?
Go ahead.
About your audience. I just heard, and maybe I misheard, I heard you keying in on property management and property management companies. Is there a broad segment of your listenership that are in that space?
Yeah, so most of the listeners listening are people that run property management companies. They manage properties for and on behalf of investors.
Okay, let me just say this about that.
Mm-hmm.
I'm going to go back to, I think it was number 6. It might have been number 5, but it was right in there. We talked and drilled down a little bit about our proprietary trust. Guys, mm-hmm. I'm going to say it just like it is. You are in an uber high risk business. Property managers and property management companies, they plain and simple, they get sued. I mean, the facts are 1 in 3 Americans get sued, 2 in 3, 66% of all surgeons get sued. And property managers, I don't know what the numbers are, but every time I talk to a property management company, they're constantly getting sued. And I've put on several, we just recently, we put on several property management companies who have gotten the trust, and their prime motivating reason was to have the trust be the owner of the property management company so that mm-hmm. they would not have liens and or judgments that could be affixed to the company. Guys, this is something that you definitely want to explore further. Very, very important for you because of the high risk nature of the business that you're in.
Yeah, I agree. I have an asset protection attorney, and I think it's a wise choice for everybody to have some asset protection stuff going on, move things into trust and make sure the business is protected. So, well, very cool. So if somebody is looking to, we've got several people that I've spoken to even recently. They're like, I don't have the funds to work with Jason, but I want to work with you. They're trying to get money, or they're trying to get their business started, or they know there's something they need to do and they just can't afford to do it. How can they get in touch with you? How can they reach out? What's the best way to connect with you and what you've got going on?
Absolutely. If you're looking for funding, I'm going to give you a web address.
Okay.
And that web address would be platinumfinancing.group.com. platinumfinancing.group.com. Now,
Okay.
there's a calendar on there, and we will get you a complimentary consult. And please, though we'll ask you, make sure that you mention that you came from Jason. That's we always want to know where clients came from, and then
Mention DoorGrow and the DoorGrow show.
please,
And
please, 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 and that'll get you that complimentary consultation now for financing. So when Jason's got great programs, which I've heard nothing but fabulous things about, that can be the genesis and give you the capital to be able to move your business forward and get his programs. Secondarily, another way to access his programs is, as I said, from the savings, from the tax deferral, from the trust program, and or talking about the trust as well as a asset protection vehicle, because if you get wiped out, you're done. You know that. And this is one way to ensure that you're not going to get wiped out. I would go to platinumtrustgroup.com. platinumtrustgroup.com. We have another calendar there. Now, the difference between the two, other than the information that you're going to find and the calendars that you're going to find, is that the calendar times that you're going to get blocked out for are quite different. If you go to platinumtrustgroup.com, we're going to block you out for an hour so that we can talk about trusts. And likewise, we can also talk about funding should you have an interest in both. If you strictly go to platinumfinancing.group.com, you'll be diaried into a calendar for a 15-minute blockout. So just be aware of that when you make the choice as to where's the best entry point to get in touch with us.
so if they're really looking maybe at everything and they want to get kind of the full kit and caboodle, the best place would probably be go to the platinumtrustgroup.com, and you can also help them with the financing side of things as well.
Absolutely.
Okay, perfect. All right, cool. Well, Bruce, it's been fabulous having you on the show. Thanks for taking us through all the different options. I wasn't aware there were so many different options for funding, and I appreciate all the info that you were able to share with us today.
Well, I certainly appreciate your allowing me to come on your show. It's been a pleasure, and I look forward to chatting with you guys. We'll get you taken care of, and we'll get you the funding so that you can take your business to the next level and protect it as well at the same time.
Fantastic. And one thing I just thought of is that a lot of our listeners, they run property management companies. They're all connected to investors. And so do you have any sort of program or relationship that you can make with these entrepreneurs that are working and dealing with lots of investors, trying to get them into multiple properties and new properties?
Absolutely. And not only that, we need to talk because we have an affiliate program. So give me a call. Let's have that discussion. That's a whole other discussion and another income stream potentially for you. I'm glad you mentioned that, Jason. That was a great heads up.
Okay, cool. Yeah. All right, perfect. Bruce, it's great to connect, and I will let you go.
Thank you so much for the opportunity again. Have a great day. Have a great weekend.
All right. So if you are a property management entrepreneur that wants to grow your business, you want to add doors, you're looking and you're feeling a little bit stuck, you're dealing with some of the typical challenges, you're trying to do SEO and pay-per-click and content marketing and social media marketing, and you're just not getting the ROI, you're not adding the doors that you're wanting to, there might be something different. There might be some things that you're missing. You might have some leaks in your business that you can't see. Reach out to DoorGrow. We'll help you shore those leaks up. We'll help you get on a trajectory of growth. And I would be honored to be able to coach you through that stuff. And we can certainly help you redesign your website. And if you are wondering if you need to, go and test your shiny new website or your old website at doorgrow.com/quiz and see if it's got some leaks there. And you could be losing out of tens or hundreds of thousands of dollars in future ROI every month, depending on how many leads and deals you are missing out on because your website is an F grade. So I want you to have an A+. So talk to DoorGrow and let's see if we can help you get that taken care of. So until next time, everybody, to our mutual growth. Bye, everyone.